What is up everyone, welcome back to another stock market video, and today I'm going to be talking about NIO and some of the big catalysts coming up for 2021. I'll also be speaking about a couple of big $80 price targets from Analyst upgrading it in their 12 months time price of NIO, and right now at its current price of about $45 gives us an 80% upside to the stock. And lastly, I'm going to be speaking about some big information that NIO is doing to position themselves into ramping up their production, which will ultimately push the stock price a lot higher. Hit like and subscribe if you want to see more of these videos. With that said, let's get on with it. So moving over to bazinga.com, we can see that the biggest price target here is $80.30, and this was initiated on the 22nd of January by the research firm Numera, and they've given it a buy rating. There's some pretty good targets here with an average of around about $60, which is a lot higher than our current prices of $45.50. So with these analyst price ratings, you need to research who they actually are and if they have any credibility. So this company here provide advice to institutional investors. So that's a good start to be having such a good rating for NIO. So moving over to Wikipedia just to see actually how much this company is worth. And over in the corner here, they've got a yearly revenue of $1.3 trillion, but that's in yen. So from that, we can conclude that they are a pretty big firm from Japan. So that's pretty good for NIO. So moving over to MarketBeat, we can see some more analyst ratings, and another one I want to highlight here is done by Morgan Stanley earlier in the year on the 28th of January. So they've got a price target. They lifted it from $33 all the way up to $80, and this is normally a 12-month price target. So I've got a latest one here by Mizuho, which I don't know about, at $60. So that's still a pretty good price from its current levels at the moment. Moving over to the charts, we can see the S&P 500 has been steadily moving up. There's quite a few big dips here, and just recently the big tech dips that came across here, although if you look at it in the bigger scheme of things, it's only really 4%. So generally, there's still no sign of that big market crash everyone talks about. In just a 6-month chart of NIO, we can see that it has been hovering after this initial ramp up here in November around about the $40 mark. And there was that big kind of sell-off from the $66 highs all the way down to the bottom, so they lost about 40% of their value. So right here was a pretty good buying opportunity. To TradingView to have a deeper look at the charts, we can see that the all-time highs here at $66, and that was the big 40% drop right there. You can see the two levels that I've got. So this is usually, if I was to be buying, it would be in this level here. It's just the upper end of that at the moment. That's just got to break through the resistance line of $46, but I see it hovering in this area till more good news from NIO happens. I don't see it going actually beyond right up to the $60 mark, because I think the stock has run up quite a wee bit already. So I own 150 shares, and I'm just not buying anymore because to me it just seems a little bit more expensive, even when it got around to here. So I still want to see some more good news if I was to buy any more at this stage. But it is, however, a very good entry point to be around there, because this is a very strong resistance. And if we go back down a bit, it was a long time ago before it even dropped this far down. So a lot of buyers came here and popped the stock up to above $35. So an article from Bloomberg, one of the very big news is that NIO partners with the local Hefei government for the EV Industrial Park. In reading here, electric vehicle maker NIO is partnering with the local government of Hefei in China's central Anhui province to set up a new energy vehicle industrial park, adding momentum to the city's ambitions of becoming a hub for EV production. So to me, this is all very well and good, but what I really care about is this is how they're going to be ramping up their production. And this is really going to reflect on the share price if they produce more vehicles. And I'll get onto cars in a little bit shortly. The park will integrate electric vehicle R&D, manufacturing, pilot demonstrations, and industrial support services. So the big key word here is that manufacturing, which means they're pretty much going to be adding another factory to increase their production. So let's now look for some supporting evidence of how much cars they could be producing. So moving over to NIO website, they released the news of how many cars they produced in 2020. I've already done a video on this, so this is just them talking about the highlights of them ramping up production. When you get news like this and you're invested in companies, it's very easy just to be lazy and not think about it. But if you're invested and you think the money is a big amount, like I do to me, I think that my 150 shares is a very big amount for me in my investment. you really got to read and understand what you're investing in and having a look at what can cause the stock to go up or down. Sometimes it doesn't always reflect that when the news comes out and the stock goes down or it doesn't do anything, but eventually whatever the market's doing, it does find a price for the stock. So after reading all this, there's some very important points at the very bottom. So this is the full news here, and we've just got to go down to the very bottom and let me find it again. So here's an important highlight that will affect them, and this is just saying the first quarter of 2021 and what the company expects. So the delivery of vehicles is expected to be 20,000 to 20,000.5 vehicles, representing an increase of approximately 421% of the same quarter in 2020. So an increase of approximately 15 to 18% from the fourth quarter of 2020. And also talks about revenue, but I'm going to go over that right now. Moving to this finance article, NIO Q4 2020 earnings, the company's revenue has crossed the $1 billion mark for the first time ever. So that's $1 billion in the last quarter. Reading for the 3 months that ended on December 31st, 2020, NIO earned $1.02 billion in revenue, missing consensus expectations by 2 cents, but corresponding to an annual growth rate of over 130%. For the financial year 2020, the company earned $2.32 billion in revenue. So this is very good news. What they're telling us here is that they're gaining more customers and they're selling more cars and then making those deliveries. So essentially there's real growth here, which means that every car that they are producing, there is a buyer for it, which therefore means that the company is going to be selling more cars if it produces more cars in what it's doing. So yes, it is going to be producing more cars because their first factory is starting to ramp up. I've heard rumors that it's going to be to about 100,000 cars per year. And the other factory that they're making is being built right now, so we just need to give them a bit more time, but hopefully that can come up and that will also double it. So how I track those deliveries is here at Hypercharts, and we can see that in 2018 they produced a total for that year of 11,000 vehicles, and then 2019 they then doubled or close to doubled that with 20,000 vehicles, which by the way, when we saw from that article that the last quarter they actually made this amount of vehicles. So you can see the amount of progression that NIO is making by scaling up. It does take a long time to be able to manufacture these cars. People just think they can just double their production, but there's a lot of things that actually happen in the background. You have to get your production lines going, you have to get the quality control going, you have to get the logistics and actually get the parts to your factories. But luckily China moves very fast with all their raw materials there. They're very efficient and they actually make high quality products, contrary to what everyone believes when it's a higher price point. And in 2020 we can see that they produced 43.7 thousand cars for the year. And this spreadsheet here, who was made by someone else, so credit to them, not to me, but I do use it regularly, is this is the top 25 automakers by market cap. So one of the biggest complaints is, why isn't NIO moving up from $45? You've just got to compare it to what the rest of the automakers are doing. There's a lot of car manufacturers, but 3 of them are pure EV plays, which is Tesla, NIO and XPeng, and we can see that NIO is the second highest EV pure play with 70 billion market cap. And obviously we have Tesla that's currently $665 billion, and behind them is Toyota at $200 billion. While people get emotional about the stock price, you also got to remember that it's got to relate to the market cap. And we can see that they are $70 billion and they're only producing 43,000 cars. You compare it to another Chinese automaker, which is BYD, and they have a market cap of $84 billion, which is a little bit more than NIO. And they're producing 10 times the amount of cars at 426,000 cars per year. You then move up a little bit higher to Toyota, which is just a little bit over half the market cap of Tesla at $350 billion, and they're producing 9.5 million cars every year. So I think NIO's share price at $45 is pretty damn good for only producing 43,000 cars, because they're really lagging in the amount of vehicles they make, and this is really a risk for them if they don't continue to grow. So just to conclude, my final thoughts on this is you can see from the information that NIO is seriously gearing up to be mass producing cars with one factory in the way, and the current factory is ramping up, and we know that the local government is also supporting them to be able to take on Tesla in the future by producing more cars. So as a shareholder, I'm really excited about the current growth projections that's coming up this year, and also from the CEO interviews he also talks about the scaling up that they're going to do. So we just need to give them more time to be able to do this, and then hopefully we'll get benefited by shareholders as the share price will increase as they make those projections. But just as a warning, if you are investing in NIO at around about the $40 mark, the stock is very volatile. You can see it's gone all the way up from $66 and dropped all the way down to $35. So that's pretty much 50% fluctuations right there. And right now we can see that it is operating very expensive for the amount of cars that they produce. So you just got to be aware of that. And really, if you're buying right now or dollar cost averaging with them, that you have a long-term horizon for them in the next, say, investing at least in the next 2 to 3 years. However, in saying that, NIO does have a habit that if good news does come out of more cars being built, that the share price does jump up quite high, as we've seen in the past, and then it sort of comes back down again. So just be careful buying at the high end. So as for me, I'm currently not buying at the moment because I don't have any extra money. I'm just back to saving again. But even at those current prices where it got down to $35, it's still a bit too expensive. My cost average at the moment is $23, so still too expensive for me. I'm just going to be saving, and I'm just going to be watching on the sideline. Well, that's enough for me today. Thank you for watching. As always, make sure to do your own due diligence in the stocks that you buy. May the gains be with you, and I'll see you in the next video. Goodbye.